Guys, today we will be going over the easiest trading strategy that you can consistently execute on a daily or not necessarily everyday basis, but on a fairly regular, consistent basis. So, step one is you want to identify or understand the most probable institutional order flow direction for that given day. So, as you can see here on GBP USD, we are in a considerably large downtrend and have been for a considerable amount of time. So what does that mean? It means that any swing highs that get violated on a intermediate term basis are more than likely going to be runs on liquidity and stop hunts before continuing in the desired direction, i.e. faking traders out. Breakout traders will be looking to get long, especially when you're trading at a massive discount in relation to the overall higher time frame range. They're going to be having, their breakout orders filled. Other traders who are less informed are going to be seeing it as a break in structure and they're going to be trying to buy down here. But ultimately, because we understand the larger institutional order flow direction and what's the most probable direction for the day, we can just be a little bit more patient and wait for what we want to see happen. So number one is we want to wait for a run on liquidity that happens during a kill zone. So first of all, let me just denote London kill zone, which we have 2 a.m. to 5 a.m. New York local time, which would be this. We'll bring this down. This is our London kill zone. So we want to be hunting for something to happen in this window of time. And initially, let me just block this off actually so we can make it easier to see. So we're looking for something within this window of time. And as it stands right now, I would be reasonably assuming and want to take sells from up here until I have some other information that's presented to me. So let's see if we get any information. If we just play price on, we can see we start trading down, we start trading up. Oh, what do we have? Is this a break in structure? We don't know. Let's be patient and let's wait. So we can just mark this on. And also, if we denote this is also Asia high, which is always acts as such, a large liquidity pool, especially if you're taking the side which is in the opposing direction to current institutional order flow. And we get a continued move to the downside. So what can we do in this situation? We have had a run on liquidity. So we've taken buy side liquidity, inducing trades onto the wrong side of the market. And then we've had a continued break in structure as we were more than likely anticipating. All right, it wasn't from our premium levels that we wanted to see it from, but we now have a new range to deal with. So we can denote our premium discount. And if you notice, we have these two consecutive bullish candles that took out the buy side liquidity before giving us a break in structure to the downside. And if we also note here, we have a 15M fair value gap. So I'll also denote this on like so. And reasonably speaking, we can be looking to take an entry from anywhere within this range, with this fair value gap being a good place, and we can either cover the high or cover these candle bodies here. All depends on what you want to do and what your personal risk appetite is. And we tap in and we give a lovely continued move to the downside, giving well over 5R, as you can see there. And all happening within the specified time window. This is the most important thing, is the time this happens. If this happens outside of this window, I'm not interested. The only other time that I'd be interested is